There are certain indicators that are both common enough for us to see them again and again, and generally have a high probability of success. Now, I'm not here to tell you that the market will always go your way when you see this indicator, but you can bet most of the time it will. In this video, we will go through what this pattern is, what key things are needed to indicate a double top or a double bottom pattern, and how you can trade those, as well as some examples. If you enjoyed the video at any point, comment and like below so we know what to make more of in the future. So what is this pattern and what does it mean? The double top or double bottom pattern indicates two attempts at a resistance or support line before being rejected. It's an extremely bearish or bullish signal that indicates breaking of a trend, and it generally goes the opposite way. Some people will notice that there are two mountains with a soft valley in between, or the inverted view of that. Before I dive too deep into how to look out for these, it's important to understand that not all patterns will give you an 100% edge. In this case, I've seen data going anywhere from 60 to 80%, but even then, it's hard to tell if it's the specific data point for your ticker or what you're trying to trade. All this is to say that you need to manage your positions and never assume that just because you see this pattern, it'll always work and go all in on it. Now, as you go through this pattern, there's a couple things to recognize. First is that there's of course the double top and double bottoms that you see, but in between there's a valley, and that's called the neckline. That's where an attempt was made lower, but then it was rejected from that attempt and it went back up to form the second mountain. This is an important level because it signals that there was a support on a back test. And after the second attempt at a high and break back lower through the neckline, that's an indication of the pattern basically continuing through. Some people also look at going underneath the pattern and seeing what happens after the neckline is attempted again and then rejected. And sometimes that could be another point where you can come in, either going into the downside or into the upside, knowing that it's tested that neckline multiple times. This pattern can show up through multiple time frames. So if you're a swing trader, you might want to look at the hourly chart. But for those who like to trade options or are day traders, you'll likely see the same thing play out on the 5 and the 15-minute chart. If you're interested in getting some free stock, Webull is a great platform that I personally use. Feel free to check them out. If you use the referral link below, you'll get 5 free stock on sign up. Now let's go through some examples together. The first example that we have here is Snow on the 5-minute. And what you can see is an attempt of Snow breaking out into this 220 resistance level. It just barely hit it, came back down, hit another resistance or a support level down here, and then it tried to go up again. And here you can slowly see the forming of a mountain, essentially, right? The first time it tried to go through, it almost hit 218, 219, went back, formed a neckline, right? And here's basically support within these two levels. Tried again, couldn't break through 218, 219, and then it went back down. So what you could look at is 2 points. One is looking at where the neckline is and potentially taking a position when that breaks. So right around here, you could have taken a position and see if that broke. Another thing that people could do is looking at the retrace of that neckline. So on this side, as we see the break on the first bar down on this 5-minute, and then we see an attempt to go above it again, right? And on this break, if it cannot get above the neckline and continue up, or there's a high chance that it will probably go back down and test the downside again. And that's exactly what happened here. Here's another example on Costco at the 1 hour. And what you can see here is that there was a big drop and we hit some support on the downside. Right here it is right around 535, 540. And it attempted to go up, right? And then we hit resistance right around here, around 545. So that defines the neckline. And then it tried again back to the downside, and it was rejected again from the downside at around the same resistance or support. And as we broke up through that neckline, we can see that there was a considerable amount of power or momentum behind it. And we saw a huge increase of over, let's see here, from here to here, about $30, $40. So what you could have seen as you go through this is the formation of two bottoms, right? This one right here, and then this one right here. If it broke through this neckline right around 546, that would have been an indication to maybe get started moving back to the upside, or taking the back trace So we see that the neckline is around 546. The day after, there was an attempt lower on the first bar on this day, and it tried to get to that 546 level, didn't quite get there, and then went back up. And that could show you basically that there was enough support at this level and right above the neckline that it would keep going, and you could have went in anytime here and would have had a lot of success moving forward. And finally, this is an example of Apple in the 4-hour time range. What we can see here is over multiple days. This is great for people who want to swing trade or they're looking to get in at a certain price point, either to the downside or the upside. What you see here forming over the week or so is basically one of the first mountains, right? You see this form, and then there's an attempt lower, and we hit right around 172. It's a pretty good support point where this stock either likes to get rejected off of, or if it breaks under, there's probably not as much support on the downside. So what we see here is the first couple of days, we build the first mountain to the top, we reject off of this 180 level, go back down, hit the support level of 172 here, and now that's that neckline, right, of knowing, okay, if it breaks through here, that's a potential place to go into the downside. We see it try again, going back to the upside, hit around 178, 180 again, and then break lower. As it's breaking lower, you can either take the attempt going down, knowing your levels, or you can wait until the neckline, right? And you see there's some consolidation, there's some fight back and forth here, either getting above this support at 172 or below. And once you confirm that it got below, you could have gotten in and you could have ridden 170 to about 165. So that's a 5-point ride in over just a day, right? Yeah, so this is the double top or double bottom pattern, and it's a really important indicator knowing when you want to go short or long, and it helps you understand where things are with reference to the stock, either in a longer time frame like the 4-hour or in a shorter time frame. Thanks for hanging out with us on Stock More. If you enjoyed this video or learned something, please let us know below and like the video. If you have any questions about any of the examples or any of the material we went through, feel free to leave us a comment below and we'll try and get back to you as soon as possible. Once again, we appreciate your support. See you next time and stay hungry.